What's up, YouTube? Eric here, Mr. Fired Up Wealth. Today, I'm gonna bring you some real talk. Let's talk about the Fed. Let's talk about Jerome Powell and what he said yesterday. Break that down a bit. I'm gonna share some real thought opinions about the market and where it might be headed next. We'll also look at a chart. I'll tell you where I think the S&P 500 is going next for the VOO and the SPY. So let's just get right into it. This is unedited, raw. I do these often. It's called real talk, all right? So I just hit record, I talk to you. Now, if you're a trader, if you're looking for meme stocks, things like that, this might not be the best channel for you. If you are a long-term investor and you want to learn about long-term investing, stay tuned, and I promise you this will be the best time that you spend today. No kidding, guys. Why do I say that? I've been investing for over 20 years. I've been through bear markets, okay? I've been through the dot-com crash, all right? So I started investing in the late 1990s. If you're new to investing, you started investing since the pandemic, I've already been through that same situation, essentially very similar situation where we had a lot of these dot-com stocks that didn't really have earnings. They were kind of just an idea, and a lot of them went to zero. And we're seeing that with a lot of these SPACs, a lot of these meme stocks. We're seeing a lot with, some of these pandemic type plays. Like a Peloton's down 96% from its peak after reporting earnings today. Okay, so if you were holding on to that, thinking it's going to go higher and you kept dollar cost averaging, you're in a lot of pain and you might not ever get your money back. That company could go belly up. Maybe it recovers some, but if you're down 90%, you need 10x return just to break even on your cost basis. So think about that for a second, okay? Now, I'm not saying that my portfolio is not down. I'm not saying that I haven't had losers before, but I've learned the hard way, just like you're experiencing now, and I learned how to hedge my risk and how to develop a methodology that works, that I think can ride the waves for both bear and bull markets. And it's done very well for me. And I'm very confident about my portfolio between now and 2030. Okay. So I'm a long-term investor, started investing in the late 1990s in college. I started with $50 a month and I've accumulated millions over my lifetime in the stock market. And I'm here to share information with you. And you get a lot of trolls and clowns. If you made so much money, why are you doing this? I'm doing it because I enjoy it, and honestly, I'm doing it because I wish I had something like this when I was younger. I had to learn everything the hard way. I had to figure it out on my own. We didn't have the internet in the capacity we have it now. We didn't have YouTube back in 1999. In fact, the internet was an idea, and a lot of people thought that it wasn't even going to be a sustainable idea. And so you look at things like the metaverse, and now we're having that same opinion, and maybe we look back in 10, 20 years, and it's the same story with metaverse. Hard to say, and time will tell. So yesterday, Jerome Powell, the Fed, they raised 75 basis points. That was expected, okay? And they did pivot. The Fed pivoted from hawkish to more hawkish. So kind of a joke, maybe not funny, but that's seriously, what happened. So when you look at the opening remarks that Jerome Powell said, he talked about the U.S. economy slowing significantly, modest growth this quarter, activity in the housing sector has slowed due to interest rates. Unemployment's at a 50-year low, labor market out of balance, demand still exceeds supply of available workers. I've got tons of notes here. I posted a free Substack. You can go into the community channel. You can get a link to that if you want to read through it. We will stay the course until the job is done. These are all quotes from Jerome Powell. We will do everything we can to achieve these goals, to get that 2% inflation. Okay, so at first, when the information first came out, a lot of people were very dovish, saying that, this is dovish because it says, we'll take into account the cumulative tightening of monetary policy, the lags which monetary policy affects economic activity and inflation, and economic and financial developments. Kind of saying that we're going to take this data into consideration. They hadn't done that before. So the market actually reacted. It was up green. And then things changed, especially when we get to the commentary from Powell. So the Q&A session, he expects higher rates coming than previously thought. Well, that's not good at all. So what's priced in the market? We don't know. Let's look at a chart here in a few minutes. Stay tuned. Watch this video in its full duration. Make sure you like and comment. If you're not a subscriber, subscribe now. Click that bell to get notifications. Okay, so he said we are now 18 months into the situation. We do not have a specific way of understanding if inflation becomes entrenched. Well, that's not giving me a whole lot of confidence there, Jerome. So you kind of don't really know what's going on, and you're just guessing that raising rates is going to fix the problem. It gets worse, so hold on. Quote, more comfortable breaking than fixing it. So more comfortable breaking something than fixing it. So they'd rather break something in the market than try to fix it. And so what they're basically saying is like, we're going to bring inflation down. Even if it breaks something, we can use our tools later to fix it. And there's a clear message here. The Fed's not backing down until inflation is controlled. That is their focus. At this point, the markets went from red to green, and then they were down 1.7%. You know how the day ended. It got pretty ugly, especially in some of those growth names. We had some great earnings from a few companies last night, and they were up significantly after hours and pre-market. A lot of that got faded. We've seen that over and over with some of these names, okay? He also said something like this. So every comment that he said made the market go up or down, and mostly down. It got worse and worse and worse. If we over-tighten, we can use our tools to respond. So that goes back to that whole break and fix comment. Housing significantly is impacted by higher rates. Had thought we would see a tighter labor market by now, basically saying that they expected more unemployment. Some rays of light in data on private sector wages. That was positive. Wages are moving sideways, not down. Don't see case for real softening in labor market yet. Clearly a difficult time in the global economy, and strong dollar is a challenge for some countries. And here's what I said multiple different times. I said to, Twitter, and I said to Discord, honestly, like trying to predict what's going to happen with the market from here, you have better odds going to a roulette table and betting on red or black, and those aren't even 50-50 odds. And I say that sincerely. And I know you want a guru that's going to give you a crystal ball to say the S&P 500 is going to go to this price at this day. I'm going to give you some possibilities, but I want to give you some methodology behind that to help you as a long-term investor. Now, a lot of people come at me and say, the market's going to go lower. It's got to go down 20%. Why not go to cash and just wait and buy it back later? That's timing the market. It's very difficult to do. I've never actually seen it done successfully very many times. Now, if you saw this coming, right? If you saw 2022 coming and you sold in 2021, that would have been a great move if you're trying to time the market. Generally speaking, long-term investors are not really timing the market. There's things that you do, like you shave positions when they get frothy. There's things like hedging you can do. And I was selling some in 2021. I was shaving positions like Cloudflare at $190, and I did sell a lot of stocks last year. Now, with that said, I'm not going to sit here and tell you I'm perfect, because I've made mistakes and I bought stocks that are down significantly as well. The thing about it, though, is I started with next to nothing. I've grown that to millions of dollars. And even though it's down significantly in 2022, it's still up astronomically from what I put into it. And it's going to continue to grow over time once we get past this. Now, with that said, we are not in a bull market. We're in a bear market. And if you're buying heavily, you are fighting the Fed. And the thing is people get it twisted. They come at me and say, oh, you guys are the buy the dip, crew, whatever. That's not true at all. We're buying specific stocks at specific prices. And if you follow what we do in Discord, we've done very, very well with a lot of the names. And sure, some of them have gone lower, but if you look at it, your cost basis might only be down 5 or 10%. If you look at 2022 and what you're buying, Snowflake, when you're buying it at 110 and now it's at 150, and say you bought some at 180, your cost basis is about where it's at now. If it goes lower, you still have room because you're managing your cash, you're managing your position off a blueprint. We teach blueprints, building a blueprint of what you want to own, different pillars. I teach that in the masterclass, in Discord, whatever. But the thing is, at the end of the day, you have to invest in what you have conviction in and really what you believe in. And the thing is what I believe in is probably going to be different than what you believe in. So I had a comment the other day or yesterday about, you guys are buying tech stocks right now. Why don't you cover any oil stocks? Hey man, if you want to buy oil stocks, it's your money, it's your prerogative. If you want to go to cash and wait for that magical 20% drop and you think you can time that and you think you're smarter than the market and people like me that have done it for 2 decades, go for it. Maybe you'll get lucky. Here's the thing. The only reason you get so upset and come at me, you know why? Because you want everybody else to think the way you do, and you want to have confirmation bias. You want me to come on here and say, do exactly what you're thinking, sell everything, go to cash, and try to time it, because you've already sold that to yourself in your head, and you want to believe it's true, and you want everybody on the planet Earth to agree with you. And that's the only reason you come at me with hostility over stuff like that. Do whatever you want with your money. You shouldn't be upset if I decide to buy a stock. If I'm nibbling a stock and I'm buying 1/10 position, that's my prerogative. I'm buying specific stocks at specific levels. I'm using technical analysis, and I'm using a methodology that I know works for me. You have to do what works best for you, period. End of story. So when you look at this, right? So we'll continue to add specific stocks at specific levels. This is what I told the community, and accumulate in this bear market with a long-term focus. I'm buying stuff with a focus of 2030. I know if I buy something right now that it could still drop and go lower, but I have cash to buy more lower and I don't have full positions. That's how I do it, and that's how I like to do it. If you don't like that approach, then don't do it. I'm not going to sit here and tell you you're wrong. I'm going to say do whatever works best for you. Don't come onto my channel and tell me I'm wrong, okay? If you don't think I'm right, it's fine, but you don't have to be so passionately, disrespectful and disagree with what works for me, because it's my money. If you want to sit on cash, you want to buy bonds, do whatever you want. It's not my prerogative. It's not my money. I know what works for me and my risk tolerance and my suitability, and you have to figure that out for yourself. And this channel is going to be a perfect fit, a niche fit for some of you. And for others, it might not be, and that's okay. That's why I don't have 500,000 followers, and I don't need 500,000 followers. I don't do this for money. I didn't start a YouTube channel to make money. Do I have a private community that you can join that costs money? Yes. And you say, well, if you're doing it free, you do it for free on YouTube. No, it's because I can control the community, the quality, and I can get rid of those trolls and those spammers. Go look at the comments. How many bots are out there trying to scam you? I get sick of that kind of stuff, guys. And I want a community where everybody in that community agrees with the same approach of long-term investing. That does not mean herd mentality. It means that we have similar methodologies, not always the same. We don't even buy similar stocks, but we agree that we're in a technological revolution and that these secular growth trends are going to make money. We also know that we're not going to be right every time. And if you think of Peter Lynch, even though he was a value investor, he said, if you rate 6 out of 10 times, you're doing pretty well. We know we're going to be wrong sometimes, okay? So if that mentality fits you, definitely subscribe to the channel, because I bring great stuff like this to you at no cost. And I can do that because of the Motley Fool. So I need to announce that this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. They don't tell me what content to make. They don't tell me what videos to cover, what stocks to cover. They are a great partner, and check them out. They allow me to do this and bring content like this to you. Because I'll be honest with you guys, you don't really make money doing YouTube ads. And I have money. I don't necessarily need to do this. I do it because I want to help you, and that I like the stock market, period. And if you don't believe that, I'm okay with it. That's okay. Anything that's high quality, that you want to have quality control, there's going to be skin in the game. It's going to cost, and that's where you can go to Patreon, Fired Up Wealth, and check it out if you're interested. If not, just subscribe and get this free content, guys. So we're focused on long-term 2030 plus. We'll continue to add specific stocks at specific levels and accumulate in this bear market with a long-term focus, 2030. Wealth is created in bear markets. You just don't realize it until the next bull run. If you're picking the right stocks, it's not going to matter if you buy it 5% higher or lower. If it's up 10x in 5-10 years, you're not going to care if you bought it at 45 or 55 if it's a $250 or $500 stock. And that's the point here. And no one's saying that you're going to buy the dip and get rich overnight. That's not it at all. You're accumulating. If you're working, you're still bringing money in, and you're using that money to invest in the market with a long-term focus, just like I did back in 2000, and even more significantly in the financial crisis of 2008, 2009, when all my friends were going to cash and put it under their mattress, and I'm not exaggerating there, I was buying stocks and being made fun of it. And some of the stocks I bought were wrong, and they went down a lot. Some of them went up a lot. And the overall basket, well, it went up a lot. It's just, it's a numbers game. And you're doing your best to be right every time, but you know you're not gonna be right every time. You don't need that kind of pressure on yourself. So what is going on with the S&P 500? Let's look at a chart and let's see where the VOO, the SPY, might be headed next. Okay, this is the VOO. This is the Vanguard S&P 500. This is what you generally are gonna buy as a long-term investor. It's got a lower expense ratio. SPY is more of a trading instrument, but I'll look at SPY next as well. They both track the S&P 500. Now, if you look at this, we do chart day every Wednesday in Discord, Patreon, and this is where we go much deeper than YouTube. And the reality is, guys, YouTube does not have an audience. So 1% of the subscribers from Fired Up Wealth, the 30,000, 1% or so in our elite Discord and they want to watch videos that are 30 minutes long talking about where stocks might be headed. I understand that that's not for everybody, and that's why we have different audiences. I appreciate everybody on this channel right now watching this video on YouTube, and YouTube's important. This community is important. But if I make videos that are 30 minutes long looking at 40 tickers like we do on chart day, that's not going to have a wide audience on YouTube. It just doesn't, especially because we look at charts as long-term investors and not as traders. And that's very unique in itself. Everything about this community is niche. We're focused on buying growth, outperforming the market, and then basically converting that growth into blue chip dividend type stocks to live on passive income and retire early. Now, if that's not niche, I don't know what is. But if that's interesting to you, that's where you'd want to join the private community and check out patreon.com/firedupwealth. I quit a $150,000 base salary plus commission to do this. I'm passionate about it. I want to help you. And I put a lot of heart, soul, blood, sweat, and tears into that Discord and Patreon community. Anybody on here that's in the community, comment, because it's going to be more important coming from you than coming from me. They just think that I'm trying to sell them something. And that's not really the case at all. I want you to be part of the community if you're a good fit. And if you're not a good fit, I don't want you in there, okay? S&P 500, VOO. So we drew this up actually a couple weeks ago, this line here. And we said the S2 is likely, this bottom red line. Now, we didn't quite get there. This was back October 22nd, and we're not even close to it now. But the reason I'm showing you this is it's a possibility. It doesn't mean that it has to go here. It means that it could. And if the market rolls over, these are your different support lines. These are Fibonacci's on TradingView, and you're looking at 330, and you can see some of these lines don't match up perfectly with Fibonacci because we're looking at other things as well. So technical analysis, it's more art than science. I've been studying charts for 20 years, and I'm still learning every day, guys. But the unique thing about me is I'm looking at these charts, trying to give you long-term perspective for better entry and exit points. So where we're at right now, we got down to 338 this morning. It got up to 343. We're hovering around 342. Now, it's really hard to know what's going to happen. Earnings have been pretty good overall. And you can sit here and go, this is what I said, you have a better chance of betting red or black on a roulette table than telling me if we're going to go higher or lower. What I tell the community is expect lower lows. If it doesn't happen, consider it a bonus. Now, the thing about it, guys, is that we're not buying the S&P and the SPY. We're buying individual stocks. So when I'm looking at like cloud stocks, those are going to behave differently. They're going to bottom at different times in the overall indexes. There's a lot of variables there. So here's the SPY. You can see this got down to 348. Now, what's interesting is I circled this yellow circle way back here in June and said that we could see it come down as low as this. And if you look at this, we got almost to the bottom of my circle where I said it's possible. So if you want my honest feedback, and don't roast me if I'm wrong, because the thing about technicals is just possibilities. So I also circled this down here, and I said it could go all the way down here. And this is, $300. That is possible, and it might not happen tomorrow, but 2023, we could go into recession, things could get worse, and we could see this yellow circle. So you have to understand that. So those guys and gals that are telling me, sell everything, go to cash, and wait till we get to here because it's going to happen. It could, but we don't know that. We don't have a crystal ball. But if you buy here, it could go to here, and you don't understand that. What you should care about, okay, not just dumping all your cash, you want to buy at levels, but even if it went here and you bought here, are you thinking long-term or not? If you think you can time it, do it. Again, it's your cash, it's your money, do what you want. For me personally, if I'm looking at this, it probably is going to hold the previous lows that we saw October 22nd. But expect lower lows, and if it doesn't happen, it's a bonus. So where's it going to go from here? It's in the middle of this first circle, and it's going to depend on data. If CPI comes in hot, it's going to retest the lows and probably break it. If CPI comes in light, you could see a rally, especially when you think of midterm elections. You could see a rally between now and the end of the year. Does it have to hold up? It's a bear market. You could see a bear market rally, but you could go lower in 2023. And you need to understand that and have appropriate expectations, because if you do and it happens, then you're not shocked and you don't blame everybody else. So many people buy stuff, they buy stocks off of like a recommendation on a YouTube channel or TikTok, and then they want to blame everybody but themselves. You're ultimately responsible for your own money, and you got to do whatever you think is best for you. Am I buying the SPY today? No. Do I think that it could literally hold up here and go higher? Yeah. Do I think it could go to crazy lows like $300 in the SPY? Yes. And you say, well, you didn't help me. You didn't tell me where it's going to go. Nobody knows where it's going to go. Nobody. If anybody tells you with certainty that something's going to go up or down right now with all the macroeconomic events, they're full of crap. And maybe they get lucky, but nobody knows. I don't care who you are. Nobody knows with certainty what's going to happen next. So that is the facts. That's real talk. I hope this is helpful. Make sure you like, comment, subscribe. Appreciate your time and attention. Have a great rest of your day. Take care.